Good evening, everyone. Thank you for tuning in on this beautiful Sunday evening. For Penang side, I think the rain has already subsided. We have quite good weather in Penang for today. Okay, today is 30th of November 2025, and now it's 8:30 p.m. Malaysia time. So we will talk about this month's forecast, month of difficult beginning. So we are beginning another new year. Unfortunately, the last month of the year, the forecast is a difficult beginning. We have reached, the December 2025. How time has flies. And for those of you who are new in our platform, we are actually applying Chinese astrology and trend research to forecast the economic financial global events to help you to make a better investment decision. And I think most of our member has found that what we have given has been quite rewarding. Okay. Yeah. We know what we are doing. Okay. Yeah. So here we'll kick off by the introduction, which I've already done just now. The disclaimer, okay, and then brief recap of last month's forecast. We always go back to last month's forecast to recap on what we have forecasted to see whether it's accurate. So far, I think we have already achieved more than 80% accuracy. Okay, in both the global trends forecast and how the astrology has already, impact or influenced the trends of the global events in geopolitics, in financial, in economic, in natural disasters, the weathers. Okay. So, and then only we will go to the high.
Sorry, Evelyn.
Yeah.
There's a comment that your voice is a bit soft.
Oh, okay. Is it better now?
Yes.
Yeah. Okay. So we we will go back and recap on what we have forecasted last month and see whether whether the event does take place or not. And next we will go to the highlight of tonight, which is the forecast for the upcoming month on the influence of the five elements energy. Okay, from the astrology standpoint, what will happen in the global trends, and PC will also give a forecast on geopolitics, financial on the upcoming months as well. And we will wrap up with a summary and we will give an opportunity for all those who call in live to ask questions. Yeah, okay. Anyone that call in lives, okay?
Evelyn, the,
Yeah.
the voice is still a bit soft. Is it the
Oh,
position of the mic?
yeah. Okay, so let me just adjust a little bit. Is it better now?
Slightly.
Oh, okay. Yeah. Yeah, I need to buy a stand up mic already.
Because sometimes it's louder, then it sort of wane off a bit.
Oh, okay, 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 yeah. Because actually, this is the same mic that I've used for my training as well. Okay,
Uh,
so yeah, let's do a little bit of disclaimer here. The content is purely based on our studies in global trends in related to five elements in astrology and trends research for use to use as a guideline in your investment decision. And we would like to caution you, as always, exercise a very, a, a, a very thorough approach in your investment, especially in such volatile situation where you have to do your own research on the companies you want to invest. Here in this talk, we will not give any stock advice. We will only give it to our members, some of the stocks we study in a private member Telegram group. Okay. So yeah, additional support will be through email, and members can address that in the Telegram group. We analyzes different regional economies such as US, Europe, China, and definitely there will be inherent biases or differences from the region perspective, as the observations are based on our studies and the current economic trends. And this does not reflect any absolute or definitive judgments about any specific regions from our side. Okay, so we are, in other words, we are impartial. We go through, PC will go through his global trend research from the KOLs and from the mainstreams news, and me, I will go through the astrology point, what the 5 elements astrology for the upcoming month looks like, the astrology charts. Later on, for those who are new, you will know that what type of astrology chart I've used to forecast the global trends. Okay. So far, I think we have already run this platform more than 3 years. And so far, I think our accuracy is still quite high. Yeah, 30. I think we are already in the 40th episode now. So 40th
Yeah, 40
episode, I think
second.
the 40 seconds. So it's more than 30 at the sample size. It's already 100%. So I think 80%. We know what we are doing. Okay. So yeah, for those who are new, as I said, we deploy two methods, and our um forecasts are aligned to the planetary energy, fields, and trends research to achieve high accuracy of 80% to help our members in making a profitable investment. We have also launched our um, book here, Unlock Your Wealth Potential, about the 5 years upcoming energy, where you can get it in Shopee. Okay, formerly, you can get it in the popular bookshop in MPH, where we have accurately forecast some of the items that go 3 years ago. Those who went to our book launch, we talk about go. I hope those that went, you have taken the action. Okay, then I think the global trends and all these things, they will very much it could be quite rewarding if you are taken action at that time. Okay, yeah. Okay, so let me check. Yeah, okay. So yeah, so we are in our fourth year now on the global trend and astrology forecast. Every year since year 2022, we have already published books. This is online annual books. That one is for that one is in bookstore through a publisher. Okay, so this is our own book we write every year that we put it online for sale um, from 2023 onwards. You can read our past. I think there's one year I let people or let the public to access 2024 Wood Dragon year before end of 2025. I let you know before end of I think 2024. So I let the public's access to check how accurate our forecast is on global trends. You will not find this type of book anywhere else. I think we are one of the first to start this astrology and global trend forecast where we use two methods. So from 2023, 2024, and 2025, okay, and now it's available in the online platform. It's an ebook. We only publish ebook for yearbook. Okay, so because it's only 1 year, the life is very short. It does not make economic sense to publish, physical book. So now we have already launched the book since November. This year is a bit late now because of some publishing issue. So is we have already launched this book, and it's going to bring a very exciting, you know, 2026 from the study of astrology, and we correlate with the global trends. And the free sample is actually available for preview. Maybe PC you can sort of drop it in the chat box so that they can download the free sample for the preview. Okay, and then after you preview, we will tell you where to get the book at the last page. So a snapshot of what we have forecasted in 2025 in our book. We have talked about a volatile, but not yet collapsing global economy. It's volatile, but I think it's still not yet collapsing. That's what we have forecasted. We did not forecast collapse. Okay. Then a powerful bull run in gold and key energy related commodities. Okay. And then intensifying geopolitical flashpoint in Ukraine, Middle East, Indo-Pacific, plus some shipping disruption. You check the news as it is also, in the news that all these events are happening. And then another year of climate extremes, a clear surge in protests. Not we see it in 2025, there's a surge of protests because of the cost living of the inflation as well. Okay. And I think we have also forecasted on the East and West conflict and between US and China. Okay. Yeah. So yeah, without further ado, let's check on or recap on last month what we have forecasted in November 2025. So we have forecasted that everything looks good on the surface, but there's a clash. Is There's an internal clash, water fire, and also the month pillar and the year pillar and the day pillar. There's also a clash. So we forecasted the year branch and the month branch because high and snake the S is a clash. It's a water and fire clash, the branch. Okay, the branch energy is much higher than what is in the stem. So the clash will be quite high. So this is where we look at it that and I have forecast on flash floods, heavy rain, and electrical fire. And then metal, active, continuous growth, market is volatile. Didn't we have, very volatile market? And some, celebration of success, landslide is also happening. And also this is all the, happenings that correlate what we have forecasted now. Stock market crash, some of the items in some region. And then even in Hong Kong market is also very volatile now. It's up and down. Okay, you can see that it's market trend down. I talked about that last month. You can go and check my talk in my YouTube channel or in the Rubbers where PC also released his video. Okay, so and weather condition we have flash floods, typhoons everywhere. Okay, especially in this month is called a destruction month. Chinese call Paul Yun. That means there is a clash between the snake and the um pig. Okay, this month is a pig month, a high month. For those, I think some of you that follow my channel are experts in Chinese astrology also. Okay, so yeah, the weather condition again, and then yeah, we started off on August 31st. There's a very abnormal weather condition. I think it happens for a while only. In Ulu Tiram is hit by hailstorm. I do not know whether y'all know what is hailstorm. Hailstorm means that the ice, air batu, ice, that fall down, and then it will cause some damage on your vehicle. The mirror, all this will crack. I have seen that when I was in US and in Austin. The time there was a hailstorm, the ice was big as a golf ball. Okay, yeah, and also some um maritime tensions that is happening. Okay, the shipping related items because high is a rainwater is a sea. Okay, and clash with the fire. Definitely it will happen. No? Okay, this is how you check the image of the 八字 for the month. Okay, and then yeah, unfortunately we also have electrical fires that happens. I talk about electrical fires. I especially talk about that because it's really it shows that type of image to me. Okay, flash flood. The Hapjai that is having flash flood as well. So if you refer to my Facebook post, I'm also very sorry for those who caught up And we also talk about earlier on. I just want to remind you guys that I think first half of the year I talk about that. In the summer months, it seems that China has an upper hand. But however, in the autumn months, the thing has turned. It seems that US has an upper hand now on some of these happening where where China is not very happy anymore. Okay. So for example, the Chinese owned chip maker Nexperia is a very famous chip makers. If you are in the manufacturing industries, especially in electronics manufacturing, you will know who they are. Okay. Yeah. So okay, so and also there are headlines that Trump suddenly comes to Southeast Asia, okay, and somehow very buddy to our prime minister, ask prime minister to ride in the beast, because I think he needs the prime minister's my card to fuel because we got subsidies, but he needs that card, so he asked Anwar
Jadi
to
kali
to
atas ni
sit with him.
gitu.
Aku tak tahu.
Okay. So yeah, this is also in my Facebook, the war between East and West, in my earlier post as well. So let's go to the highlight now. In the month of December 2025, what is the energy telling us? Okay, so in December, actually, there is a countering energy. I won't say it's a clash, but countering. Water and fire is still a counter element between the pillar. Wood and mountain is also countering as well. Okay, there are countering, and also there are some combos. Very interesting. Okay, yeah. So we will have intensification of winter conditions in northern hemisphere. Okay, because actually northern hemisphere in Canada, it started to snow already in October. Okay. Yeah, I got that. I don't know whether we have any Canadian friends that call in. I have some Canadian, friends that call in as well. Okay, then potential frost and damage or snowstorm, especially in North America, East Asia, and Europe, and isolated wild storms that is happening. So the branch has countering energy between the four pillars for the month of December's 八字. Okay, yeah. Yeah. The month of 八字 for those that know Chinese astrology is actually from the 24 solar terms. Okay. Yes. Okay, so you expect geopolitical tensions involving issues tied to survival and security. And then the day pillar 跟 sheet actually the day pillar is 跟 sheet. So indicate militaristic posturing and hardline government, and wood and fire industries might face pressures. International shipping and transportation will also face challenges. Global trade policies may face revisions and retractions where the market will still show defensive and bearish behavior. Okay, so our member already have the upper news already have this news a few days ago when I posted in the private Telegram group. Okay, and snow moving or stuck because there are too much resources. There's a lot of earth that is surrounding the metal day masters. Okay, all around is surrounded by earth. Okay, yeah, and the hexagram for the mana based on 无子, okay, based on 无子 is actually difficult beginning. Every pillars has a hexagram. Okay, so it is actually, you can see here, is actually water on top, and also the 整卦 is at the bottom. This is 坎卦, this is 整卦. So bottom is not stable. So we expected some, some maritime, some sea, related activities where it is not stable as well here. So it is like, it is like, hopefully I hope that no seismic activities that is beneath the sea, because this is very deadly. It could cause tsunami. Okay. So, but I hope it does not happen. Okay. So yeah. So a time, because the chart is only countering and not clashing. Okay. So it's a time of new beginnings. That is clouded. Is hexagram number 3. So it's clouded by confusion, lack of structure. So the new initiatives, we will have the new global initiatives that struggle to take roots. Okay, because there's some old and new. And next year, I think the fire is very strong. It's going to really transform. Okay, so now, especially in December, I think the world was stuck in transition. The financial system may undergo some stress test. I do not know whether BC, have look at is it aligned with currently what is happening in the research in your research in global trends?
Yeah, I think the later we'll talk about one of the elephants in the room will be the Japanese yen and the Japanese bond market. So that is in a very dangerous zone, which could affect the global economy. And I think towards end of December, there is going to be more details coming out on the issuance of stable coins in the US. So meanwhile, there is a changing of trading in among BRICS country, which is also going to um, alter the financial landscape, because suddenly we will, as I've as we have written since a few years ago about the dichotomy of financial system, that one party would pursue the cryptocurrency uh, uh, platform, the other would pursue the hard asset platform, which is international trade that's going to be backed by gold.
Okay. Is my voice still soft?
I think you
Can you
have
give
to
can you give me
the
a 2 in the chat box if you can hear me clearly? Is it so soft or PC?
right now with the microphone closer to your mouth, I think is clearer than earlier.
Okay, good. Okay. So yeah. So and then the global atmosphere is cautious and somewhat uncertain, yet full of potential if built patiently. Okay, there is always opportunity everywhere. Okay, thanks, Procy. Yeah, okay. I hope you are not hit by the snow. Since you stay in southern part of Toronto. Okay, yeah. Okay, so yes. Okay, so I think that is all for the forecast from the hexagram and from the energy of the 4 pillars for the month of December. Okay. Yes. Okay, so over to you, PC. Would you like to share?
Yeah, you
Like
have to.
yeah, okay, I stopped sharing. I have to put you as a yeah, I have not put you as my as a this one yet, as a co-host yet. Let me just stop sharing and put you as a co-host. Yeah. Confirm. Okay. Yeah. Okay. So yes, go ahead, PC. You can share your stack now.
Okay, hold on. Okay, so we recap what we predicted in November and what actually happened. So a number of things that we raised about the US, we cannot verify because of the government shutdown, and cause the economic indicators being unavailable. And Europe, we voiced our concern that the EU and China could head towards a trade war if the next period episode remains unresolved. And the Dutch government finally relented and handed the control back to the Chinese company Wingtech. So we forecast that the euro and British pound could weaken against the US dollar, but month to date, the US dollar has weakened against both currencies. And this is because I think as we draw near closer to December, there is a change of positioning, because previously they were positioning for a stronger dollar, but as December nears, I think investors actually took profit and they started a bearish outlook on the US dollar, mainly because they are front running the Fed's interest rate cut which I think will be announced on when the FOMC meets on 9th of December. So this is due to positioning by traders, bullish and then bearish. So in China, we predicted that the Chinese economic indicators could show improvements in October, but they came out worse than expected, despite the first week being the Golden Week holidays. Now, this could be a very worrying trend because it shows that consumers are not spending as much as they did previously. If we look at the growth in retail sales and also in terms of industrial production and a number of indicators, which we will explore later on. So on the trade discussion with the US, we were expecting that the fentanyl tariff to be removed, but it was only reduced by 10%. On other issue of China, we were right 50%. We expected Trump to have an adjustment in language with regard to Taiwan in exchange for an unhindered supply of rare earth from China, but that did not happen. US was very silent on Taiwan, and it could be because of that there's still no deal to be reached with regard to the supply of rare earth. There were reports that the US and China are still discussing how the rare earth should be treated, because China is adamant that there cannot be any use for military production where the rare earth are involved. So I guess because of that, there's still, a lot of things are still in the gray area, put it this way. So we continue to say that the US would continue to manipulate the CPI in order to manipulate the GDP higher. And so far, based on the September reading, 40% of the inflation data is due to guesswork, where none actually existed in January 2025. You can see that this is January 2025, where it's very close to the 100%. In fact, 90% is actually based on data, but you can see that the trend is up, that the inflation is has increased in terms of guesswork. And what is surprising is that there will be no CPI data for the month of October. Now, the other thing is that the GDP for the third quarter has also been delayed. Now, this goes to show that there are some adjustment, okay, put it that way, being made to show a much more optimistic figure, put it that way, because without the CPI being announced, it's very difficult to manage to actually come up with the real GDP. So obviously, I think there's going to be a lot of guesswork to put in a figure that would show optimism. So we mentioned that the delinquencies would actually show further increase And as of the third quarter of 2025, student loan delinquency is now 14.3%. Previously, it was hovering around 12%. Credit card delinquency is now 7.1%, which is the highest in 14 years. And auto loan delinquency is now 3%, highest in 15 years. So because of the delinquencies, there's going to be a lot more problem for the US economy. And right now, foreclosures of home ownership are up 20% year on year. So you can see that the Trump admin is trying to manage the inflation expectation by trying to keep the Treasury yields down. Okay, and how they do it? They have the US Treasury Department buying back their own Treasury bonds. And total purchases in November so far has already reached 7.064 billion. So you can imagine that the US is issuing debt to buy back its own debt. So that goes to show that the US debt will continue to snowball. And we mentioned that things could get worse with the ICE rates. And here are some headlines from the news clippings. And the US government finally reopened on 12th November 2025. We said that Trump would take the opportunity during this shutdown to pursue his own policies. So what actually happened was during the shutdown, US debt has increased by 900 billion from 23rd October to 5th November. And the US government has also launched 15 strikes on boats in the Caribbean during the government shutdown. So earlier, Evelyn mentioned that there's going to be tension. So that tension is right now building in the Caribbean. So in November, we mentioned that we will see investment interest in gold and silver ETFs. So this is how gold has performed. You can see that after, beginning from November, it is gradually trending up. And so this is the GLD, and this is the GDX. Okay, they reached a bottom here, but now it's trending up. In fact, I think this was on 26th November with 2 days. There was actually sufficient further upside in both the GLD and the GDX. So in terms of silver ETF, this is the SLV. And I believe that this was on 26th November with 2 days, 27 and 28, especially on 28, silver actually rose close to 6%. So I can imagine that it would have pushed itself further upwards. And the SLI, which is the silver ETF, I believe right now it could be in the 80s region because that was with 2 days to go. I think it would have already reached 80 something. Now, for those of our members who join our group, we started talking about silver, I think about 2 to 3 years ago. At that time, the SIL, I think, is just under $20. Okay, so if you look at it over the last 3 years or so, it has actually 3x, okay, from the lows below 20, 3 to 4x actually. If we look at it, it could be about 80 something right now. So in Europe, the Dutch government is handing back control to China, to the Chinese company Wingtech. And China has been adamant and not bow to pressure. So after some hard stance from China, the Dutch government finally relented. And we say that the Europe manufacturing will remain in the doldrums. So here, there's two charts showing the Euro area industrial production Okay, and the UK. Yeah, this is the Euro area, not UK. So Euro area industrial production rose 1.2% year-on-year in September, but missed expectation of 2.1% growth. Month-on-month again 0.2%, missing expectations of a 0.7% growth. So the expectations were higher because the ECB has been easing in its monetary policy. But it still continued to fall short of expectation. You can see that March actually the industrial production reached a peak. But after the peak, you can see that it's very erratic, but it's on an overall downtrend. And we want that the downgrade in rating by Fitch could trigger a rise in the French 5-year credit default swap. And the UK too will see a rise in its 5-year CDS. So this is what happened. The France 5-year CDS is actually up 11.9% in 1 month. And the United Kingdom CDS is up 1.99%. We mentioned that the German government could face turmoil should it reform its welfare and pension scheme due to insufficient funding. So young conservatives are now rebelling against the chancellor. And we talk about anti-establishment parties gaining popularity in Europe and in Germany. German-Swedish leader raises alarm as far-right AfD surges in eastern states. And Reform UK could win more states according to polling by BBC. And France right and left-wing parties are surging, so can it hold the center? So there is a lot of chaotic political climate right now in Europe. And in China, as predicted, the status quo on the remaining tariffs will be extended this time by 12 months until November 2026 instead of usual 90 days. As of 2025, we mentioned that China will pursue the internationalization of its renminbi via its own payment platform called the Cross-Border International Payment System, or CHIPS, which is now available in 185 countries. And as predicted, the internationalization of the renminbi in cross-border payment is steadily. Now, according to a report by SCMP, the renminbi used in cross-border payment rose 14% year-on-year to 35 trillion yuan, which is 4.9 trillion US dollar, according to the PBOC. So this is now gradually gaining pace. And if you look at it, a number of countries right now, they are actually issuing renminbi denominated bonds, okay? And that is why even though the 10-year yields among developed countries keep on rising, but the Chinese 10-year yield for their bond, is further down the rung, much lower than in the US and in Europe because there's demand for Chinese bonds. So we mentioned that the demand for silver will intensify. So this is what happened. Okay, this is during the months of November. You can see that there was a plunge in the physical stock at the Shanghai Gold Exchange and the Shanghai Futures Exchange. And you can see that the withdrawal is very intense. Now, one of the primary reasons is because there's scarcity in silver, and that is reflected in the price of silver. And that scarcity, okay, is driving a lot of industrialists in China to actually demand withdrawal of physical because they are afraid that with China, everything is so electrified, okay, from vehicles to infrastructure to consumerism and such. If in the event that there's not enough silver, a lot of industries could face problem because silver is used across any industries that has everything to do with electrification. And the other hand, silver is also one of the important material used in medical science because of its antibacterial properties. And because of that, there's a lot of demand for physical silver, especially China right now is the global manufacturer, accounting for close to a third of global production. And because of scarcity of silver, these industrialists are demanding. In fact, there are some reports out that the situation is such that there is some recommendation that for speculators who are non-industrial players, speculators are encouraged to exchange their gains, okay, with cash rather than demand physical. So we'll talk a bit more about silver later on because there are a number of trends that you should be aware of. So US economic indicators release of Q3 GDP data has been delayed. No CPI data for October. I think it's all aimed towards coming up with a optimistic GDP figure for Q3. NAHB index came in at 38 in November, up from 37 in October. Existing home sales rose 1.2% month-on-month in October. Year-on-year, it rose 1.7%. Pending home sales rose 1.9% month-on-month in October. Year-on-year, it fell 0.4%. Preliminary PMI for manufacturing came in at 51.9, while for services came in at 55, both signaling expansion. There were no other economic indicators due to government shutdown. But delayed data, CPI rose 0.3% month-on-month in September. Year-on-year, it grew 3%, up from 2.9% in August. So as you can see, the inflation is creeping higher, but the market is still pricing in that the Fed would cut interest rate in December. Core CPI rose 0.2% month-on-month in September. Year-on-year, it rose 3%, down from 3.1% in August. The PPI rose 0.3% month-on-month in September. Year-on-year, it gained 2.7%, unchanged from 2.7% in August. And retail sales rose 0.2% month-on-month in September. Year-on-year, it gained 4.3%, down from 5% in August. Net retail sales less CPI was 1.3%. So all this delayed data is causing a lot of investors jittery because they do not have the updated economic data, and a lot of it has to be based on guesswork. So recently, there's been a lot of talk about people being wary of an AI bubble, and it all came out because Michael Burry, the one who was made popular in The Big Short, made his thesis on why he thinks the AI stocks are in a bubble. And soon after, a lot of news started to come out, and the foremost one being Oracle. So Oracle has lost roughly 303 billion in market value since signing the OpenAI deal. Its share price has fallen from a peak of $345.72 to $197.03 as of 25 November 2025, which is essentially a fall of 43.01%. Its CDS hit 104 BPS, the highest in 5 years, more than 70 BPS wider than the investment grade average. So that is actually very, it means that the credibility, okay, of Oracle debt now has become a question. Its free cash flow fell 152% year-on-year in Q1 for the financial year 2025-26. Then there's this process called round tripping, and this is how they go about it in order to, it's like a process of you scratching my back and I scratch yours. So this is how NVIDIA and OpenAI feel the AI money exchange, money making machine. So examples are NVIDIA invest 100 billion in OpenAI, and the latter uses the investment to purchase NVIDIA chips. OpenAI signs 300 billion deal with Oracle, and the latter plans to buy 40 billion of NVIDIA chips. CoreWeave expands partnership with OpenAI to 22.4 billion, and the latter signs a 6.3 billion deal with NVIDIA. OpenAI to deploy 6 gigawatts of AMD GPUs. AMD gives options for OpenAI to buy 160 million shares, which is worth 32.98 billion in today's money. Okay, and then that money is used to siphon back to AMD to buy, it will be used to buy AMD chips. So this is how all the round tripping is done. You can see that, one going to the other in purple and then coming back to the former in blue. So analysts also examine NVIDIA's most recent 10Q financials filing, and they found out that NVIDIA's accounts receivable grew by 5.58 billion quarter and quarter. Take away growth in accounts receivable, and revenue misses by 3.49 billion. This is another manufactured beat. So a lot of it is the revenue actually comes from accounts receivable. Okay, it has not been money put in the bank. So the other irregularity is NVIDIA's Jensen said that the spike in inventory was due to supply for chips in progress, but he neglected to mention finished goods, which rose by 109% in 9 months. Okay, now this goes to show that they only talk about things that are positive, but the negative, they just leave it out. Okay, now if let's say there's such a huge demand for NVIDIA chips, why is it that the finished goods are now lying in the warehouse, okay, that is 109% higher than at the beginning of the year? And the other one is goosing depreciation, which means altering how depreciation is calculated. NVIDIA chips, NVIDIA ships a new flagship AI chip every 12 months. AMD does the same, and Google just released its 7th generation TPU. Each generation delivers performance gains so large that the prior year's hardware becomes economically obsolete for frontier work in 18 to 24 months. But Microsoft, Google, Meta, and Amazon are depreciating the same hardware over 4 to 6 years. Now, for those who are in the accounts or in the financial department of your respective companies, you would have realized that normally the depreciation period for computer equipment is 2 years. Okay, but here, this is how they extend it to 4 to 6 years. By so doing, big tech will spend roughly 400 billion on AI infrastructure in 2025. Depreciate that over 5 years, you expense 80 billion per year. Depreciate it over the actual 2-year useful life, and you should be expensing 200 billion per year. That 120 billion annual gap compounds between 150 billion to 200 billion in overstated profits through 2028. So you can see how they lower down the expenses in this manner. So here the author actually argued, use H100 GPUs, which sold for a premium which sold for premium prices 18 months ago, are now trading 20% to 30% below year-ago levels in secondary markets. When those prices fall below 40% of original cost, the accounting fiction becomes impossible to sustain. So this is from Shanaka, okay, who wrote on X. So you can see that a lot of all these big tech companies, they are also doing a lot of financial shenanigans, okay, in front of your eyes, okay, in front of analysts' eyes, but they don't care. They just want to push the stock price higher and higher, which, creates an environment like what and how Enron failed during the first few years of the 20th century, 21st century. So then again, there's question of the OpenAI requesting a bailout, but Sam Altman later on clarified that they wanted to discuss government loan guarantees for chip plants, not data centers. So OpenAI proposal is to sort where US government guarantees loan to help finance the construction of AI chip manufacturing plants. This would have lowered the company's borrowing costs by shifting some of the financial risk to the taxpayers. And the question is being raised. OpenAI has 13 billion revenue, but it has a 1.4 trillion in commitments. How will that 13 billion revenue meet that 1.4 trillion in commitments? Okay, it just means that, okay, the revenue have to increase 100 times, okay, in order to meet that 1.4 trillion commitments. But it has to be more because this is revenue, not net profit, okay? So MIT came up with a scathing report that says that 90% of Gen AI failed to deliver ROI, which means that how much they spent, okay, in building up the AI infrastructure ultimately did not deliver that kind of ROI. Now, one of the primary reasons why the US AI is at a risk is because of the lack of power. Okay, right now, one of the main costs besides depreciation, investment on the infrastructure, one of the main consumable costs is electricity. Now, the US electricity costs far more than the electricity cost in China. That is why China is able to scale its AI at a lower cost. But the US electricity build out is very slow, and it is in competition with other industries and even residents, and pushing the price of electricity ever higher. So it's very difficult for US to scale up its AI infrastructure without scaling up its national grid and its power generation. And here, another analyst put forward a very interesting idea that investment in AI hardware and software accounted for over 90% of all GDP growth in the first half of 2025. Everything else is essentially flat. Every other sector, every industry is trading water. Unemployment has ticked higher, hiring has slowed, construction is weakening, consumer confidence is falling as lower income households cut spending. Okay, so you can see that if we exclude the processing equipment and software, GDP is around here. But if we include, it's here. And the other thing is that GDP also includes the round tripping of revenue by the big tech companies, which means a lot of it is just, shuffling the figure left pocket to right pocket, but nothing productive has been actually consumed yet. So this is showing a very dangerous trend. And US budget deficit. So US budget deficit was 284 billion in October, up 10.5% year on year, and US budget deficit now constitutes 7% of its GDP. US national debt now stands at 38.3 trillion. And the rolling 12-month interest rate payment on debt stands at 1.16 trillion as of the second quarter of this year. So you can see that, the US cannot stop its spending, and that is why the debt will continue to snowball higher. Okay, if you look at it, okay, the net interest per month is 91 billion. Okay, and all this Medicare, Social Security, National Defense are eating into the US budget, and therefore the US has been forced to borrow more, okay, to keep the economy going, the payments to the debt going, the spending on national defense continuing, okay, and all this, will result in even higher debt in the foreseeable future. For example, right now it's at 38 trillion. By end of next year, we could potentially see, okay, the US debt hitting closer to 41 trillion, because I think by the middle of next year, we could be already in the 40 plus trillion, because the US right now takes about 3 to 5 months to reach 1 trillion. Okay, so if we build into it that we have still one December month, add in a few hundred billion, and then throughout the whole of next year, there'll be about another 2 plus trillion. So it will be closer to 41 trillion of debt by the end of next year. So what could happen in December where the US is concerned? The inconsistencies in the release of data could cause more uncertainties among investors and dampen investors' appetite for risk assets. The stock market can be vulnerable. The Fed may spook the market by warning about inflation, even though a 20 BPS cut is built in the month of December. Current lack of liquidity in the market may prompt the market to demand more actions by the Fed, but the Fed would likely hold back because the Fed will always be slow to react as usual. So it won't happen until the Fed really feels it before they will be very aggressive. And very soon, I believe that the Fed will revert back to QE. Investors are finally awakened to the fact that big tech companies are round tripping their AI investments and goosing their quarterly reports. This could burst the AI bubble and lead to huge losses if the confidence in the shell game evaporates. So it's just a matter of time. It is a ticking time bomb. Okay. So US debt is already out of control. Budget deficit and interest payment on debt will continue to grow. Trump admin will pressure deeper rate cuts, and the US Treasury will increase its debt purchases. So if let's say the Fed won't do QE, doesn't matter, the US Treasury would do QE, but they cannot do it to the level that the Fed can do, which is, tens of billions every month, okay, or even initial stage, more than 100 billion a month, okay. The Treasury can only do it in a very small amount, because to borrow money to buy back huge amount of debt will just send the yield much higher. So probably I believe that the Trump admin will rush in the stable coin policy. Okay, there is already a policy, okay, but then it has not been implemented very aggressively. So I think that they would actually want to push the issuance of stablecoin so that it can be used, okay, to back US Treasury, because under the policy, all stable coins must be backed by US denominated asset, either in terms of US currency, the US dollar, or in terms of US Treasury. So that is why I believe that in the absence of the Fed, they will really push for stable coins to be launched to back the US Treasury, to bring the yields down, okay, and put the interest payment on debt below the current trajectory. So bankruptcies will rise due to escalating costs of conducting business in the US amid slowdown in consumption. Bankruptcies among logistic firms is suggesting that the increase in retail sales is driven by inflation, not by the increase in quantity consumed. Because if, let's say, the retail sales is driven by quantity consumed, then the logistic firms would have a lot of jobs because they are shuffling goods everywhere. But a number of them are announcing bankruptcies, and there will be another few more to come. And if, let's say, the quantity of goods consumed is huge, they shouldn't be declaring bankruptcies. Okay, that goes to show that a lot of the retail sales is driven by inflation. But as long as you manipulate the inflation lower through guesswork, then everything is rosy. So in Europe, Euro area CPI came in at 2.1% year-on-year in October, down from 2.2% in September. UK CPI came in at 3.6% year-on-year in October, down from 3.8% from September. Euro retail sales rose 1% year-on-year in September, down from 1.6% in August. UK retail sales at 0.2% year-on-year in October, down from 1% in September. You can see that Europe is actually in a near depression, okay, to put it in another way, because it's been stagnant for a long time. And if, let's say, it continues to see very poor economic indicators, then it will go into a depression eventually, unless they think of way how to boost the consumption, the economy, the manufacturing back to higher levels. Otherwise, it's neither here nor there. It's fully in a stagflation, but it could go into a depression just as easily. But with inflation, called inflationary depression, it can happen because the inflation is still below the ECB target of 2%, still above the ECB target of 2%. So, and I believe that the Europe, the EU is also manipulating the inflation to try to prevent the public from knowing how severe the case is. Okay, so German manufacturing PMI came in at 48.4 in November versus 49.6 in October, while services PMI came in at 52.7 versus 54.6 a month ago. France manufacturing PMI came in at 47.8 in November versus 48.8 in October, while services PMI came in at 50.8 versus 48 a month ago. UK manufacturing PMI came in at 50.2 in November versus 46.2 in October, while services PMI came in at 50.5 versus 52.3 a month ago. You can see that the EU is two of the largest economy, Germany and France, is actually facing contraction where manufacturing is concerned. So what could happen in December? Germany auto manufacturers look set to weaken further, driven by the downturn in the sales of their luxury brands in China. Many manufacturers are cooperating with their Chinese counterparts to improve their competitiveness, but this comes at a cost to the labor force in Germany. So I believe that the major auto manufacturers will be laying off staff. So France is besieged with a myriad of problems. Economic, financial, and social political chaos will likely remain as the new PM resigned after just 26 days in office. This will hold the country back, and economic indicators could worsen moving forward. Like Germany and France, the UK faces many challenges as the country is facing multiple challenges, especially in the financial front. In October 2025, the public sector spent more than it received in taxes and other income. Net borrowing was £17.4 billion. 10-year government bond yields will stay elevated. The acceptance of a peace deal by the US between Russia and Ukraine could see hundreds of billions spent supporting Ukraine go down the drain. So the EU will seek to make adjustments to the deal, which will result in Russia not agreeing to it. So we will see the continuation of the same thing, which Russia will continue until it forced Ukraine to a surrender. So China economic indicators, CPI rose 0.2% year-on-year in October, up from negative 0.3% in September. Core CPI rose 1.2% year-on-year in October, up from 1% in September. PPI fell 2.1% year-on-year in October, up from negative 2.3% in September. Retail sales climbed 2.9% year-on-year in October, down from 3% in September. Retail sales in the first 10 months grew 4.3% versus 4.5% in the first 9 months. So this is already telling you there's weakening in retail sales. So with the Golden Week holidays, with record number of passengers traveling domestically. So I would have expected retail sales to be much stronger, especially with the Double 11 being overlapping from October to November, but it still falls short of September. And if you look at it, the first 10 months actually grew at a much slower pace than the first 9 months. That goes to show that even the consumers in China are very choosy in how they spend their money. And it could also signal that they are no longer pursuing expensive stuff. They are more cost-orientated, and they will only spend on items that they deem affordable or less expensive. For the members, I would urge you all to read the weekly report where I actually do a comparison of retail sportswear companies in China, and you can see one in particular catering for the mass market is actually outperforming the other two, which are catering for the upper middle income group. Okay, so have a look at how, and this is already showing you that they prefer something that is more affordable right now than splurging. Definitely they are splurging their money, okay, but not in consumption. They are buying, okay, gold and silver. That's what the Chinese consumers are doing, which is why the demand for gold and silver keep on increasing in China. Because you know very well that the real estate is done for in China. It has been down, I think, for past few years, with the price of property falling close to 30 to 40%, depending on which cities you are in. So because of the fall in the real estate, there's very little speculation, and people want to have mileage from their savings. With interest rates being reduced somewhat compared to the start of the year, they prefer to buy gold and silver, okay, which actually saw a gain in the value of the physical metals. So that is where they are spending the money, and they are less inclined to splurge on luxury. And that is also shown in the kind of revenue from hotels, okay? international chain hotels, they are performing, especially the Shangri-La Group, which operates in Asia, it's not seeing the kind of growth that you would expect from an economy that is, growing steadily, because there's no people are scaling down their purchasing. Okay, industrial output rose 4.9% year on year in October, down from 6.5% in September. So you can see that's this huge gap. But of course, industrial output has everything to do with the Golden Week, because it was also due to the Golden Week that factories closed for about a week. Okay, industrial output in the first 9 months grew 6.1. First 10 months, sorry, not first 9 months. In the first 10 months, grew 6.1% versus 6.2% in the first 9 months. So I think very importantly, whether China would hit the 5% GDP annual growth rate will be what happens in the final quarter. So if, let's say, industrial output returns to normal, then by right, it should be in the 6 to 7% in November. So we'll just await the indicators next month and see. Fixed asset investment went down 1.7% year on year in the first 10 months versus negative 0.5% in the first 9 months. So even fixed asset investment is coming down. It's towards the end of the year, most of the government investment in infrastructure is already tuning down. Okay, so with properties being poor, then that creates additional pressure on fixed asset investment. Survey urban unemployment rate on average stood at 5.1% in September, down in October, down from 5.2% in September. So China trade data, total goods imports and exports in renminbi denominated terms rose 37.3 trillion in the first 10 months, up 3.6% year on year. The growth rate slowed from an increase of 4% registered in the first 9 months of the year. Again, you can see that there is a slowdown. In October alone, China goods and exports edged up 0.1% year on year to 3.7 trillion. So October, well, we can blame it on the Golden Week holiday, okay, that affect the trade business. Exports slipped 0.8% year on year, but imports climbed 1.4%. The drop in export could be due to the Golden Week holidays. China current account balance registered a surplus of $489.8 billion in the first 3 quarters of 2025, according to data released by the State Administration of Foreign Exchange. The data showed that the country's surplus in the trade of goods reached $726 billion during the period, while its services trade deficit came in at $155.8 billion. So China is on target to reach a very good trade surplus by the end of this year. But again, it needs, it needs other sectors to do as well in order to balance out. So China real estate, home prices in China's 70 large and medium-sized cities generally fell. In October, new homes in the first 4-tier cities decreased 0.3% month on month, the same pace as in December. New home prices in second-tier cities went down 0.4% month on month, while the third-tier cities fell 0.5%. Month-on-month declines in second-hand home prices across all major cities. On a year-on-year basis, the overall downward trend in new and second home prices in major cities continue. So one thing, when China doesn't release more details of how many percent and all those, it means to show that it's much worse than expected. So where Chinese media is concerned, when it's good, the data would be in good detail. Okay, but when the data is not so good, they just say it's up, they just say it's down, okay, without really going into the detail. China real estate will remain in the doldrums for a longer time than expected, as recent stimulus failed to push the price of real estate higher. You remember 2 or 3 months ago, I shared with you all on the webinar that China has come up with certain policies, especially in Shanghai and Beijing, to push the purchase of real estate, but it seems that after the initial boost, it's now back to normal, trending down. One of the biggest real estate companies, China Vanke, is seeking to delay paying principal on a 2 billion renminbi note due on 15 December 2025, according to a filing to the Shanghai Clearing House. The company's dollar bond due in 2027 fell to about 3 cents, the lowest since issuance in 2017, and losses on the note have reached 60% this week. So you can imagine, Vanke is one of the biggest real estate, but it's now in distress. But China is not going to bail it out. Okay, China sees it. The government sees that you speculate. Okay, then they are not going to wipe clean the company's balance sheet like what the Fed did, okay, for the housing crisis in US in 2008, 2007 to 2008. So electricity consumption, China electricity consumption registered double-digit expansion in October. Power use rose 10.4% year-on-year in October to 857.2 billion kilowatt hour. So power consumed by overall industrial sector rose 6.4% year-on-year, while tertiary sector saw 17.1% increase. Residents' electricity consumption total 115.5 billion kilowatt hour, up 23.9% year-on-year. Now, this is very surprising because the residents' consumption is actually much lower in terms of growth. It could be due to certain climate related, whereby more heating is required. From January to October, China's total power use climbed 5.1% to about 8.62 trillion kilowatt hour. Now, if we want to measure the economy or the GDP, which has a close relationship with the power consumption, then at a 5.1% growth from January to October seems to fall in line with the GDP, which is growing at around 5%. But they need to maintain 5% or above growth in Q4 in order to straighten out the line to about 5% growth for the whole year. If let's say Q4 falls below 5%, then maintaining that 5% government target could pose a challenge. So what could happen to China in December? Retail sales could see slower gains as sales of big ticket items slow. Now, this could affect other sectors of the economy. In fact, earlier report came in that shows that big ticket items like smartphones, new energy vehicles, and all these are seeing a downturn because the subsidies are coming to an end. So the saving grace would be a surge in exports, which could put the economy on track to achieve 5% GDP growth for the year. The real estate and fixed asset investment will be the major factors that will drag the economy. China recently implemented policy to promote fixed asset investment by allowing private capital to participate. So because you see that the fixed asset investment in October actually in the first 10 months actually fell 1.7%. So I think the government is waking up that they need private capital to be involved in fixed asset investment. That means getting private sector to invest in infrastructure, for example, let's say like bridges, roads, as well as nuclear plants and all those, by converting some of these assets into REITs. And this is what China is trying to pursue. So we can expect more policies to be revealed as we near the start of the 15th five-year plan from 2026 to 2030. These policies would help to boost the market sentiment. China will continue to optimize its AI development with greater emphasis of cost, and this is the reason why China will continue to expand its green energy footprint. More self-reliance in the AI sphere as local chip development and chip-making equipment chart new breakthroughs. So let's talk about silver shortage. Now, the global silver shortage is driven by demand outstripping supply. And some of you all might not be aware, but the US just included silver as a critical mineral, while China has imposed restrictions with regard to the export of silver, which will start in the first quarter of 2026. So for those of you who feel that, wow, silver is now, 50 over dollars, that's it's already reached record high, it's time for it to come down. Then it's not happening, okay? Because there will be restrictions starting from next month, and China is actually one of the world top 3 or easily top 5 silver producers in the world. Okay, and China is going to continue to build out its infrastructure, and the electrification of infrastructure is happening across major countries in the world, and that requires silver. As I mentioned, silver is used in every electrification project, okay, including EVs, chargers, smartphones, digital products, consumer electronics, grid, solar panels, wind farms, and such. Okay, so that means that if the US make silver a critical mineral, which means US is also one of the major producers, is also going to stockpile silver like what China has been doing. And if let's say US starts stockpiling silver, they will be buying from elsewhere. Okay, and that would create further demand for silver. So the other thing is that silver has been designated as a strategic reserve by Russia, and that means Russia has every interest to stockpile its silver reserve as well. Saudi Arabia bought heavily into SLV, which is the silver ETF, in June 2025. That means that Saudi Arabia wants to have a stake in silver. India just turned silver into money. It is also to be treated as a strategic reserve. So this is a very interesting write-up. You can read it on your own free time, but overall, okay, the overall goal, India is officially turning silver back into currency. The Reserve Bank of India announced a landmark policy starting from April 1st, 2026. Banks can accept silver as a loan collateral. This remonetizes silver for the first time in modern history. So you can see that all these changes in policies is going to result in even greater stockpiling of silver, greater demand for silver as money, especially in India, now that gold has already reached has become very expensive in terms of rupees, okay? And you can see that silver imports by Turkey and India, they are actually very on near historic highs. And the other thing is that Shanghai silver vault is being emptied. Okay, so here are some write-ups showing that how many tons are being withdrawn from the Shanghai Futures Exchange as well as the Shanghai Gold Exchange. So if you look at it, okay, this is the price of silver. I think silver already breached this, and the SIL has already reached more than $80. So, but this is an interesting perspective on why silver is destined to go higher. As of 27 November, the gold to silver ratio is 78. The ratio was 31 when silver was at its peak in 2011 and 15 when silver was at its peak in 1980. 80. Now, if you imagine that the silver ratio right now at 78 going back to 15, that will imply silver would move up another 4 times in value, which means silver could be in the range of $100 over per ounce to maybe slightly above $200 per ounce, which actually falls in line for those in our members. I often post a video. I often post video when it involves Michael Oliver, okay, where he actually share his analytical insights on why he thinks silver would be $100 to $200 per ounce in the coming year or two. So the other thing is that Japan is a country in crisis. Japan is facing rising yields in long duration bonds as the new PM announced a massive stimulus. The yen is crashing while October inflation rate rose 2.7% year on year. For those who think that for those of you who think that 2.7% year on year is actually not that bad, okay? But you imagine that years ago, the inflation in Japan is actually negative 0.1%. Okay, and that means that between then and now, inflation has already increased by more than 200 over percent. Okay, close to about 280% maybe. So the yen carry trade could be at risk if the BOJ decides to hike interest rates, because if the Japan bond yield has risen very high. Okay, if you look at it over the last 10 years, it has reached its highest. So at this rate, based on the amount of debt that the Japanese government owns, they cannot afford to service it unless, okay, they start to print more money to buy back the bonds to push the yield lower. But if they do that, then the yen would actually weaken further and inflation will go up higher, and then the 10-year yield will go up higher still. Now, the other thing to do is to hike interest rate, okay, and strengthen the yen so that it brings down inflation. And in so doing, with inflation down, the yield would gradually come down, okay? But because global trade has been financed by the yen carry trade, which means people borrow on the yen because many years ago, okay, if you look at it, the yen is actually below zero. I mean, the yield, 10-year yield is below zero. So you imagine you borrow at a very low interest and suddenly you have to pay a much higher interest, then they would actually have to sell their investment in order to repatriate the money back into yen. Now, if let's say happen, that will blow up the global yen carry trade, which is in the trillions of dollars. So geopolitics, US continues its military build-up in the Caribbean. A lot of rumors of an imminent strike on Venezuela, but many are unfounded. US is applying maximum pressure on Venezuela. Recent announcement includes a closure of Venezuela airspace by the US. So this is a more distinct threat, okay, but I believe that the US would not rush into a conflict with Venezuela, but perhaps applying a lot of pressure. Okay. Meanwhile, Russia continues to arm Venezuela and China wants the US. In other areas, the UN Security Council voted in favor of Resolution 2803, which endorses the Gaza peace plan, with Russia and China abstaining. However, Hamas rejected the resolution. That means that Hamas is unwilling to give up its struggle, and therefore we can see the return of violence in Gaza. So the US and Russia is working on a peace plan, but the EU would likely demand changes to make changes to be made, okay, which will not get Russia endorsement, will likely end in a stalemate unless Trump cuts off the EU totally. diplomatic crisis between Japan and China after Japan's PM made remarks with regard to Taiwan, drawing China's ire. This spat will continue for some time. Meanwhile, US continues arming Taiwan. And this is the reason why China will ban the export of refined rare earth minerals and magnets to the US for military use. So back to you, Evelyn.
Okay, just now we talked about 2026 Astrology and Global Trends Forecast book, right? So it's now available, and you can actually download a chapter, a free chapters. I think there are sample books. In this one, you can okay, PC has already dropped that link into the chat box, and you can go ahead and download. If you like what you're reading, then you can buy the book in our online platform where our publisher, which is Lulu Publisher. Okay, and if you do not know how to open the book, no worries, come back to me. I have instructions step by step after you purchase the book that how you can open the book. Okay, so yeah, we cannot provide any PDF files because we have agreement with our publisher as well. And if you are interested to get this book for free, how many of you are interested to get this book for free? Can show in the chat box. Nobody wants the book for free. Anyone? Oh, Wafeng. Wafeng, you should get this book for free already. I already given the link. Yeah, proceed. Yes. Okay, Emmeline. Emmeline should also be able to get the book for free already. The link is available. If you do not get that book, let me know. Yeah, Lily. Yeah, thank you. Okay. Yeah. Okay. So I will, if you are interested to get the book for free, then you either for our present members, you renew your membership with us. Actually, it's very worth it. It's very, very affordable. In fact, we claim to be one of the most affordable platform compared to people of investment. They charge by thousands. Okay, yeah, at least 600-700. Okay, one of the best. Okay, so yeah, and we also deliver results. That doesn't mean affordable is not good. Our members, do you agree or not? Dear members, already agree. Awinson, you should get it because I have already, have auto reply. Yeah, thank you, Emmeline. Yeah, thank you. All our members has been with us for 2-3 years. Okay, that shows that we are delivering the value. Normally we have over 90% of the members that renew. So you can join. For those new one, you can join us in the 2026 Astrology and Global Trends membership. Okay, so the membership will include the book itself, okay? And the comprehensive membership, and it costs you 249. If you join from December onwards, you will have a January forecast, the whole of 2026, and the premium member is 356. This is an early bird price where you get 12 months forecast in full. Okay, you have early access. The benefits of joining our members is that you will have early access to our monthly forecast full recording. The one that is in our YouTube channel, we have already edited. Okay, yeah, it's for the benefit of those who join us live. We like live members. Later on, I think we should take a photo of everyone for this last session of 2025. Let's end with a good memory. And then we will have a welcome gift. I will explain about the welcome gift. Maybe BC will explain more about it. And then they will have a PDF presentation slide. Would you all like to get our presentation slides or not? Monthly. The month that just now what we have presented, you will have it as a PDF file. And the best things is that we have exclusive Telegram groups for discussion. Okay. We will share the stocks that we have studied. It's not a recommendation to buy. that we are not in that platform to recommend stocks to buy. Okay, for the membership that you're paying, if those are recommended stock to buy, I think easily the membership could cost you four, 5 figures per year.
What
Okay.
what we share is when certain companies post fantastic results, then we post it to share with the members, or when certain analysts have very strong high price for particular stock, then we also post it for our members to be aware of what is actually in the analyst radar.
Okay. Yeah, Raymond, you should also get the book already. The link is there. Okay. So never mind. I will post it in the 2026 member Telegram chat group. Okay. So again, and then special discount on our courses. We have, we run course like period 9 course that will give a lot of very detailed studies on stocks and on, the energy itself and more on the forecasting of the market trends also. Okay. That will, give you a lot of this information to enable you to make very good decisions, almost like timing. Okay. We can time on the trends, but not on trading. We are not in the space of trading. Okay. So what we do is that we sort of, um, share with you our studies, and then you will, at least at that time, maybe is, is a reasonable time for you to sort of, considering what we have shared. Okay. And of course, I think so far we have not disappoint our members. We are almost like, 80+%. We will not claim 100%. There's no platform in the world that can give you 100%. If that 100%, I think we can easily charge you 5, 6 figure. Okay. Yeah. It will be a different price altogether. Okay. Yeah. So and the premium member will get everything else, and they will get a weekly market insights report, and we will give a 3 victory assist. This is astrology also, Timan direction and daily Timan deity direction for you to manifest, enhance your energy so that you can have better intuition, because investment timing, all these are intuitions. Okay. Yeah. And those that have affinity to us means that they have affinity to us. Okay. Yeah. So it also depends on the energy and our energy whether we can click or not. So yeah, so the welcome gift for all members for comprehensive and premiums, everybody gets it. It's a Mac investment strategy videos that focus on real meaningful metrics, uncover what companies are trying to hide. Because actually when PC go through, he does not go through any mainstream news. Do you agree that some of the mainstream news does not report things that are really happening? So we need to comb the news. I think PC, he comb the news, the KOL, every now and then to ensure that what we are given is reliable and reflected the actual situation as much as possible. Do you think that is important for you to make an investment decision? Can you drop in the chat box and respond to us?
Actually, the MAD investment strategy, the MAD stands for measuring, analyzing, and having a deliberation process. So what it actually does is that it focuses on what analysts are rating, what analyst rating are given towards specific stocks in specific industry based on what industrial trend that are more prominent. And then from there, we uncover what the truth behind the analyst ratings. So I think for some of those who actually went for the first session, we targeted the food business, and we shared 3 companies. One of them actually paid the highest dividend at 9% over. At that time, the share price is about $3 plus. Right now, I think the share price is $4 plus. And this is within this year, okay? It would have paid a dividend of 9%.
Mm.
So I think some of our members have joined us for quite some time. There was a time when we asked them to buy a company at 60 cents, where the dividend yield is closer to 30% based on the dividend that is paid if they have bought it at 60 cents, which is now trading at $1.60, and its business continue to expand. So this is when we at the Telegram group we see certain interesting things, sometimes posted by other analysts, or sometimes that I come across that they have shown tremendous opportunity in terms of their profit growth. Then I would share with members, then give some insights into the specific company.
Yeah. Yeah, that's right. We have multi-baggers, even 10x for some of the stocks that we study and share. Okay. Yeah. So we have differentiate between good and bad analysts and give the investors, as PC has stated, clarity, helping you all to make more informed, successful investment decision. Okay, so match strategy, as PC says, measure, analyze, and deliberate. Okay, yeah. So yeah, this is what Mambo has talk about say our now say about us over the years. I have no time to compile all of it. So this is what we have stated, and this is what we have shown. We've shown true results. We also mentioned in the 2025 astrology chart, there will be attention on precious metal early this year. Go back, those have followed us for quite some time. I think early this year we already stated that there will be attention on precious metal. So now it's happening, especially now is the clash month. Okay, yeah. So you can see that I think we talk about it since 2022, 2023. We started this platform for gold, and then for silver also we also talk about it. Okay, so you can see that how much it has gone up exponentially. It's exponential. Period 9 energy is like this. It's quite it's quite cringe. Scary in a way. Yeah, everything, if it goes up, it will go up exponentially. Okay, and this is some of our track records. Yeah, don't buy those company anymore. We didn't tell you to go and invest anymore. Okay, yeah. This is just to show that. And also in Bitcoin also, I hope our member knows that the timing to exit. Okay, yeah, I already told you all to exit. Yeah. Okay, so yeah, so this is some of the track records that we have. Okay, so yeah, and also the market summary for all these things. This is what the weekly report looks like, for the premium members. That if you're doing trading, maybe it is a good reference for you also. Okay, yeah. We talk about the markets, some of the commodities. Okay, the trend, where the trend is, some precious metal, the index. Okay, the important index, and this is the Chiman chart, which on three victory palace. It's very difficult to combine. It's very difficult to calculate. Okay, so it is those that if those who know Chiman, we have heard famous masters that talk about three victory. In order to join their platforms, which tells you about three victories, that one easily costs 5 figure per year club membership. Okay, they will give you this data. Okay, yeah, yeah. Okay, so I think it's time for us to do summary. PC has dropped in the chat box the form to join the new member. I hope to see you all in the membership space. Okay, yeah, we can have more interaction there. PC actually he posted almost every day. Okay, yeah. So this is the this is the summary that we are looking at. The weather will be very cold, wet month, snowstorm, ice risk, and frost damage. So there will be some maritime, sea and inlet flood risk. Okay. And this will impact, I think, the shipping also, some of the supply chain also. Yeah. Supply chain actually is very much depends on the weather condition. believe me, I've been in the supply chain for multinational manufacturing companies for over 30 years, and in manufacturing for over 30 years as a engineer, also as a supply chain professional. In fact, now I teach supply chain to youth program in USM also. Okay. Yeah. Then we have geopolitics, tension over resources and ideological clashes will continue. This is nothing new. So there will be new diplomatic initiatives that could face resistance. I hope the high risk flooding will not happen, the earthquakes and the snow related disruptions. So there will be strength in infrastructure, maybe in mining and basic commodities. And then agriculture, will also face because of irregularities of the weather and logistic um, issues. And then I prefer to take a conservative sentiments and risk investment that leads to focus on some of the safe assets. Okay, and then tech and innovation sectors may contract. Maybe as just now PC has stated, the media as well, that we look into it, and the potential of the AI bubble. Don't ask me about AI bubble when the timing will this one I cannot disclose that. Okay, so I think that's it from my side for the summary. Let's go over to PC.
Yeah, summary here is that the central banks bought 10% more gold in third quarter than they did in 2024. This is a sign that they are preparing for a financial event on the horizon. In fact, if you have gone to our October presentation, we mentioned that central banks now hold more gold as reserves than US Treasuries. So silver is being restricted in China and being made a critical mineral in the US amid global supply crunch. So I think this will be truly heartfelt in 2026 when the restrictions from China will be implemented in the first quarter of 2026, and US would start stockpiling aggressively over the coming year. So silver is also being remonetized in Russia and India. Global tension is still simmering in the usual hotspots, may lead to a military conflict. The sustainability of OpenAI business development is being questioned as big tech companies indulge in round-tripping and goosing their balance sheets. Yields of long-duration bonds in many parts of the developed economies are hinting of funding troubles ahead. Japan is the country to watch.
Okay, so I think that's it from us. Yeah, now it's time for Q&A. If you have any questions, can you just type in the chat box? We will try to answer them. Yeah, to our best knowledge. Anyone has any questions? Deadline for membership. Okay, actually, you can it's actually this December, by mid-December, for the membership for 12 months. You can still join us next year, but it will not worth it because the rate could be higher, okay, and then you get fewer months already. We will all end our membership at December. Thank you, Michael, for your questions. Okay. Yeah. Next. Payment method is through Stripe is in the form itself. Okay. Maybe I can share the form. Okay. Hold on for a while. Okay. Where is the membership? This one. Yeah. Let me just copy the link over or okay. Yeah. Through credit cards, Stripe. Okay. So let me just share the screen. Am I sharing? Okay, so this is once you click on the link, you will come to this form. You need to fill in your email address, your name, your contact number, your telegram, and also, your method payment. I will give you the Stripe link is already here. And then after that, after you pay, you capture the screenshot of the thank you page from Stripe, okay, or the checkout page, and then you add in here. And then after that, you submit the form. Okay, and then we will give you the Telegram link and the link to download the ebook as well. Okay, thank you for your interest, Michael. Okay, how about the rest? Any questions? Any questions regarding the global trends for the 25 December's forecast? Anyone? If not done, I think let's call it a night. I would like to thank everyone. Maybe you can on your camera and then we can take a photo. Especially our members, to at least we can have a memorable 2025. I think yeah. Let me just up the screen again. Okay, and let me stop sharing. Okay,
Evelyn,
thanks, Karen. Yeah.
I think in another few years of this, we need to Photoshop our face already.
Yeah, we hope that we will last for very long. Okay. Yeah. I think PC have to stop sharing as well so that it will
Yeah.
appear in my view as the
Okay.
gallery view. Let me check what is the view. Yeah, we have. Yes, that's right. Okay. Thank you very much. Okay. Yeah, thanks, Emmeline. Thanks, Win. Yeah. Okay. Thank you. Thank you, Lauren. It's nice to see you, and thank you for joining us as a new member. Yes, I see Mitra. How are you doing? Okay, yeah. The rest all Dushaya. Okay, yeah. Thank you, Enview. Appreciate your this one. Yeah, thank you, Michael. Michael. I think some of it are quite blur. Yeah, thank you very much. Let me just take a shot. Everyone smile. Okay, give your best smile. Happy. Then then we will have a very good 2026 also. Keep that positive energy with you. Very important. Okay, yes, so that we vibrate at a higher frequency, we can attract the outcome that we really want. Yeah, I think we have, how many panels we have? Let me just this one save as um, panel one. Okay, yeah. And then, okay, I think that is only one panel. The rest all has already left. Yeah, thanks, Kangni. Nice to see you here. Okay, yeah, okay, thank you, everyone. Yeah, okay. So have a good night. I hope to see those that have not joined us. To join us really. I feel at least you have a better understanding on the global trends, and also it will also helps you in your investment decision if you are really doing investment. Okay, yeah, thanks, FL. Yeah, thank you for joining us as a new member. Okay, yeah, hope you will have a very profitable investment. um Bitcoin. Actually, we cover almost everything related to investment, even Bitcoin sometimes also. Yeah, we also study, cryptocurrency, and sometimes we have news related to it, we will drop it in. Okay. So it's not only purely on stocks. We also do like commodity and all these things. So yeah, PC, can you answer the question if we cover Bitcoins also?
Yeah, in fact, our 2026 forecast book have certain segments on the cryptocurrency, and I talk about the US stable coin policy. So it's very I think this time the book is much has more pages than previous because
Mm.
if I understand correctly, previously it's just about 180 pages. Right now it's more than 200 pages because we extended the coverage. And I think this time around the book has more information on certain stocks, which previously there were lesser in comparison. So it's actually a very complete book if you are interested. Okay. So you will read more, you will be able to find out more about what's in store for cryptocurrency. And I think, Evelyn, every now and then, there are certain cryptocurrencies that are of particular interest with our members. We'll just drop it in the Telegram channel, sharing what is actually being announced, okay, by prevalent parties. So hope that
Yes.
answers your question.
Yes, that's right. In our period course, we even better still, we talk about the timing of how to see the timing of, cryptocurrencies, the main one only, okay? The main one that I study, because I cannot study all of it, but I think um, PC also has, study quite extensively on cryptocurrency. Definitely is an investment for period 9. If you know
Yeah.
what is period 9, yeah, okay? So
That
we cannot
that
miss that.
definitely don't have Trump coin.
Yeah. Okay. So I think that's it. Thank you for joining us tonight. I hope that you will benefit from tonight's session and do consider, joining us as our, member for 2026. This is the time, the best time to join our membership.
Yeah, you get extra 1 month.
Yeah, that's right. PC also will give you, even the premium members, they join already. We even give, the from the week they join, we already give you the report, and we didn't wait until the December forecast also. Okay. Yeah. Thank you very much. Okay. Bye bye. Good
Okay,
night.
good night. Have
Yeah.
a
Okay.
pleasant December ahead.
Yes, that's right. Merry Christmas and Happy New Year. So I will see y'all maybe, before the New Year of 2026. Okay.
Okay, good night, everyone. Thanks,
Yeah. Good
Evelyn,
night.
for hosting.
Yeah.
Bye
Thank you,
bye.
PC, for your studies. Okay. So let me end this chat. Thank you all the members for joining and for supporting us for so many years.